Welcome to the Kitchen Table Finance Podcast, where we make retirement planning easy and enjoyable. Discover practical advice to create a retirement strategy that fits your lifestyle and budget.
Hey Dave, how you doing today?
Better than I deserve, Nick. Better than I deserve. How are you doing?
Well, I don't know about that, but I'll take it. I am doing well. Podcast Friday. Sun's out.
Excellent. Excellent.
Dave, I'm going to be honest with you. I thought we would make it a little bit further into the year before we had our presidential market and election talk. But
Well,
here we are in March, and it's happening.
and actually, from my point of view, it's like we've been dragging our feet on it because this has been front and center in client meetings even last fall.
Yeah.
And the frustrating, I shouldn't say frustrating, the thing, it just feels like we just did this and we just did it right before, right? It's
Groundhog Day all
it's
over
amazing
again.
how fast 4 years blows by.
Mm-hmm.
And how focused everyone is on this topic already. So yeah, the presidential election and the markets.
Yep. I mean, first and foremost, I guess, here's our disclosure. This is not a political podcast. This is a market podcast. And so we're going to leave all the politics outside. But we are going to talk about the elections and how they may affect the markets and what to think about, what to look at, what to expect coming up, because there's a lot of information rolling around out there. And, one thing I think everybody can agree on is, politically, we are more divisive than we've been in a long, long time, maybe ever. And so that just ratchets up the fear and potentially ratchets up the noise that you're going to hear out there.
Yeah, I try to tone that down for people because we've had some pretty rancorous debates throughout American history.
Yeah.
The first presidential election that did not involve George Washington almost destroyed the whole system. And, it's been 2 centuries since the Secretary of the Treasury was murdered by the Vice President. And it's been since, I think I've repeated these things a lot, but, how can you get more contentious than the 1850s when in the early 1860s when the country actually split into 2 different governments, right?
Yeah. Well, it's a good, solid reminder that, it seems like it's way more divisive, but, historically looking back, the things that we're fighting over right now aren't all that serious in, the history of the country, which isn't that long, by the way.
Right. And, the history of our country is a blink of the eye in the history of just the world or civilization. And, these things, and every 4 years always feels like it's the most important, most rancorous, most ugly debate we've ever had. But that's a trick of the human brain that wants to worry more about what's coming ahead than what you've lived through. So, and that we've talked about that in terms of the markets. It applies to politics too.
Yep. Absolutely. So, where to start, Dave? What are we looking at? What should we pay attention to? What should we not pay attention to? And probably more importantly, right?
I guess the first is kind of a disclaimer. We're not saying that the election is not important.
Right.
You need to pay attention to issues. You need to vote. That's how democracy works best, is when people are involved and care and do their part, right?
Yep.
But history will show that voting, you should vote your ballot, not your savings. I heard it said once, and I liked that. Don't vote with what you do with your dollars. Vote with your ballot. And in every one of these election cycles, both parties are going to tell you that, the other candidate is going to destroy the market, kill the market. We'll have a bear market. We'll have this is going to happen. That's going to happen based on a set of policies.
Mm-hmm.
The stock market historically has performed very well under both parties.
Yeah.
And, we have a companion article that we'll post, and it's got charts in it. And the chart of stock market history since the Great Depression with different colors for the different eras where the president was, blue for Democrat, red for Republican. And you see two things. One is it flips every 8 years. It cycles pretty regularly. The stripes on the chart look like the flag, right?
Right.
And yet the trajectory of the market is constantly upwards.
Yeah.
So,
Despite ourselves, the market keeps going up, right?
Right. The economy grows in spite of the federal. That's actually, my grandfather would have loved that. They can tax, they can regulate. We shall overcome.
Yeah.
Um, but as an example, as a good example, the chart, the article calls out just like the period from 2008 to 2020. Okay, so that's the Obama administration and the Trump administration, two diametrically opposed administrations when
Right.
it comes
Yeah.
to regulation, taxes, climate for the how corporations are treated, diametrically opposed.
Yeah.
Meanwhile, across those 12 years, the S&P 500 was up 236%.
Yeah.
Okay. And yeah, I mean, there's some things there, and we're going to get to this in a minute, because what really mattered was the business cycle, and we'll come back to that. But
Mm-hmm.
you can look at that and just say, well, the market didn't flinch really when the administration changed from one position to the polar opposite.
Right.
And you can pull other examples. The FDR Truman administration followed by Eisenhower. Different periods throughout the last 100 years, and you'll see
Mm-hmm.
similar results.
Well, it's interesting too. I listened to, I think it was last year that Freakonomics had like either I don't know, it was either a podcast episode or a series on like how much impact does the president actually have,
hmm
and just talking about like what they can and can't actually do and how they can and can't affect things, and it's surprisingly probably a lot less than what people probably perceive,
Right,
which is super interesting.
right. That's the beauty of our Constitution and our system. The first iteration of an American government didn't have an executive office, which was
Right.
a problem too. But when they redesigned that and put together our current Constitution, it was intentional that the president was almost a figurehead
Yeah.
as much as anything,
Right.
and has to answer to Congress, has to answer to the courts, has power curtailed at every turn.
Right.
And we want to ascribe this king-like ability, monarch-like ability. We don't need to bring gender biases into it. Um, that they have this control, and they want that, when they're politicking, they want you to believe that they can get done the things they want to do.
Right.
But and again, under the Obama administration, under the Trump administration, we had budget battles, fiscal cliffs, debt ceilings issues, U.S. credit downgrades. All of those things didn't matter.
Yeah.
We had very, very different policies on taxes, trade, antitrust, regulation. Um, they can all be important for specific and impact specific industries. But what the history of the economy shows us is that these changes tend to be incremental.
Right.
They can make small changes around the edges, but they can't move the needle too much, because we have a very balanced system, and a very, when we talk about divided government not being able to get anything done, well, that's because people don't necessarily agree. So the needle moves a little bit at a time.
Right.
We don't turn the system over every 4 years.
Right. Which is always interesting to me, like from a market standpoint of like if we have Congress controlled by one party and the president in a different party, like there's a lot less volatility in the market because we know something crazy isn't going to get done.
Right, right.
Right.
Why? Because the market hates uncertainty, and when there's
Yeah.
gridlock, nothing changes. Excuse me.
Exactly. Yeah.
The other part of that is it's almost impossible to predict how the market and how the economy are going to react to particular policies.
Right.
And there's think tanks out there that will tell you, okay, if this candidate's tax policy gets enacted, here's what's going to happen. It's going to cost companies this much, or it's going to mean this much money back for these companies, or but and what that might extrapolate to. But economics is not that simple,
Yeah.
and there's a lot of variables playing into that. And again, the business cycle probably means more like where we're at in terms of the ebb and flow of the economy between growth and contraction has a lot more to do with the overall picture than a 2% change in tax codes, or
Right.
um
Well, yeah, I think the other super interesting thing about that too is we talk about like, well, what happened with the market during this presidential, this when this president was in office. Really, a lot of those decisions, a lot of the reasons for that was the previous administration, right? Like you can't,
well, yeah. I
like a
think we
lot
have
of
to be
that stuff,
careful there too, but yes, you're right. By the time by the time the economic engine has digested the changes, that president's term is likely over.
right? Yeah.
It's and so it's a little tough to extrapolate that. One of the charts in here shows how the market has done while a particular party's presidential candidate is in office, and then what it's done after. And it's very interesting because, first of all, both are overwhelmingly positive.
Yep.
But what we see is that while a Democrat is in office, the S&P 500 has averaged 14.5%,
Mm-hmm.
and while a Republican is in office, it's averaged 10%,
Mm-hmm.
10.7. But then
Mm-hmm.
when you flip that, kind of getting to what you're talking about, this is looking at the average return the next year. When it's a Democrat that was in office and is now switched, it's 12.1%, and with a Republican taking over after a Democratic regime, it's 13%. So two
Yeah.
big takeaways there is one, you're right, there is kind of a lag lead effect a little bit, but also
Right.
it doesn't really. I mean,
Yeah.
we've got double digit returns regardless.
Right. We'd take any of
So
those numbers any given year, right?
right, right. And so, are we going to make political decisions based on whether the market's on average up 12% versus 10.5%? You know, uh, that seems a little bit of a stretch.
Yeah.
So, um, we should probably talk a little bit about the timing of regime changes and how that can affect these statistics too,
Yeah.
and perception. And my favorite, the best example of this is, Bill Clinton, president for most of the 90s, his two terms almost perfectly lined up with the internet revolution, the IT boom, .com boom.
Yep.
It had nothing really to do with his administration. It was
You're
just
right.
coincidence, right?
Yeah.
And then the .com bubble bursts shortly after George W. Bush takes over.
Right. Yeah.
He didn't pop the .com bubble.
Right.
There was no appreciable change in Washington's policies towards the internet companies that
Right.
undid everything that had happened from the 90s. It was valuations and the market correcting itself.
Yep.
And then the markets do okay. They're in the middle of his presidency, just in time for him to be leaving office as the financial crisis is in
Right.
full swing. So, did the financial crisis, can that be blamed on George W. Bush? Um, I've seen a lot of blame pointing about the financial crisis, but I've never seen anything that said if there had been, someone else in office during all of this, this
Yeah.
would not have happened.
Most of it points to the previous administration, right? Like some of those decisions that they made.
Well, and not just the previous administration, but the Federal
Right.
Reserve,
Yeah.
and which they technically are independent of the president, and uh, you know, it's there's some connection. There's always connection, but
Well, and that's
it's
one of those where, we will like to point blame and we like to, make someone responsible, but there was a lot of things going on that contributed to that. It wasn't like
right,
one decision or one person, right?
right, right. So what? So what does all this mean, right?
Mm-hmm.
Again, don't don't vote with your portfolio.
Yeah.
Don't don't make decisions. We're not going to make decisions for your portfolio around the election.
Right.
What we're likely to see is a lot of volatility.
Yep.
Because other people are going to be voting their emotions around the election.
Pretty much a guarantee that we're going to get increased volatility the closer we get to this thing.
Yeah,
right?
we don't make a lot of predictions in this podcast, but that's one, buckle up,
Yeah.
as they say, because it's
Yep.
probably going to be a wild ride. But at the end of the day, the market will go back to looking at, are companies making money or not? Is the economy growing or not? Is productivity up? What's the relationship of interest rates and inflation and all the things we've been dealing with all along?
Yeah. Well, I think that, if you want to do something, if you want to be proactive, one thing to think about is if we know we're going to have increased volatility, what we don't want to do is necessarily trade in that volatility.
Right.
So it comes back to like having sound financial principles. If you're worried about it and you want to kind of insulate yourself, make sure you got an emergency fund, make sure you got enough cash on hand for expenses that are coming up, and make sure you're sticking to a budget. And if you have those things in place, then it shouldn't really necessarily affect you because you wouldn't need, you can let the investments do what they do for the long term and not worry so much about what's going to happen in the short term, right?
Yes. The same things that give you resiliency around any global catastrophe, any natural catastrophe, all of those, our portfolios are always at risk of volatility from things we can't see and can't
Right.
predict. So you're right. Follow those basic principles so that you can tune out that noise, because that's all it is noise.
Yep.
And be there for the long haul when these things even out.
Yeah. Oh, we made it through the whole podcast before I started talking about emergency funds and budgeting, Dave.
You did say
That's
budget.
got to be a win.
Yep. Yeah, I think that's probably as long as we've ever gone. So good.
Yeah. Like you said, though, there's gonna be a lot of noise, and we've done a couple of different podcasts on how to deal with the financial media, and sometimes the best thing to do is kind of set it aside or remove yourself from it. So think about some of those things too as we get closer and closer. Like listening to the news 24/7 isn't going to help you.
Isn't
going to change anything.
No.
So
Yeah.
make sure you're taking care of yourself during this time too, because there's a lot of stuff out there that are worrying, right? No matter what side you're on. So
right. And again, do what you can do, which is vote your conscience and vote your priorities, and recognize that we're a divided country and we're not going to agree on a lot of this stuff. So that's just the way it is.
Indeed. Well, Dave, as always, it's been a pleasure.
Yep. It's been good.
If our listeners have any questions, feel free to shoot us an email at info@srbadvisors.com, and we will be back with a new episode next week.
Excellent, Nick.
Thanks, Dave.
This is a Zedia Media production.